Good morning everybody and welcome back to my channel. Today is the 31st of March 2022 and as we end the financial year 21-22, here is wishing everybody all the best for a better financial performance in the post-COVID world of 22-23. Today I bring to you a subject which is very close to my heart, and it is in continuation of a video that I posted on 2nd January 2022. That video was about incumbent responses to digital, as in how should incumbent companies respond to digital natives and digital disruption. In continuation of the same subject, today I'm going to talk about how should incumbent companies plan their digital transformation effort in terms of timing the digital investments. Now, this assumes a basic fact that no company can ever escape now, under the present circumstances, can escape digitization or getting into digital business models. However, the important question is, should I just be a copycat of my competitor? I mean, copying the use cases that my competitor is working on right now, or should I understand basic trends, pick up nuanced signals as I get into my digital transformation efforts? So folks, here today I'm going to bring to you a fundamental question of how should an incumbent company plan its digital transformation efforts. With that, let's go to the main section and start with the conversation. Timing your digital moves, ensuring the ROI from your digital investments are optimized. Now, top management dilemmas. Now, this is what I picked up from my clients and conversations with like-minded people. The big question is, how do I read signals from the environment to time my digital investments? Should I be ahead of the curve, or if I'm a laggard, what are the consequences? What triggers should I consider to scale my investments and create distinctiveness from my digital program? Now, if I am copying what my competitors are doing, then I am in a situation of strategic sameness, which would neither create a moat or create distinctiveness. So what am I supposed to do to create distinctiveness from my digital efforts? Now, this is a fairly complex issue to solve, and I thought I'll solve it by using two basic frameworks, if you may. First, to see how a horizontal technology, IoT in this case, IoT as an Internet of Things, and its adoption challenges, and then look at two industries where a combination of industry and technology and business models, and kind of review it and say, is the environment right or the external drivers right to make my moves in digital? And after that, create a generic framework, and look at three stages of evolution of incumbent responses and come to a conclusion. Let's get started. Now let's look at IoT as a technology, and IoT has been around for quite some time, but the potential value of IoT could unlock by 2030, according to McKinsey estimate, ranges between 5.5 trillion at the lower end and 12.6 trillion at the higher end, including the value captured by consumers and customers of IoT products and services. Majority of value being captured in B2B application. However, McKinsey did this simulation in 2015, and they kind of looked back in 2020 to see whether their 2015 simulations held good. The actual value captured by IoT products and services and consumers thereof in 2020 was 1.6 trillion USD at the lower end of the estimate. Now the important question is, IoT, mature technology, what's stopping people from actualizing the real value? And here are few of the things. Now, as we talked about, the value proposition and the ROI of IoT is well known and understood by everybody, or the users of IoT products and services. The connectivity is strong enough to enable commercial IoT applications to work to perfection. The technology performance is also stable. Now, if I look at what impedes IoT's value capture, the first principle is interoperability. Which interoperability is a concept, is an ability of software to communicate and exchange information with like software and enabling multiple systems to talk and understand the information they pass on to each other, basically sharing of information across multiple systems. Now, proprietary systems or walled gardens don't do so, they restrict information. Now, as industries mature beyond the pilot phase and set scales of large-scale transformation using IoT, interoperability becomes a very, very important driver of value. There is no common system, there is no common operating system for IoT, but emergence of cloud computing majors like AWS, Google Cloud, Azure are actually creating open systems which will accelerate the interoperability or accelerate innovation, which will enable interoperability of IoT systems. Now, if you look at its application, think about it. Predicting when machines will require servicing is of limited value if machine servicing is not automated, and that would require multiple systems to talk to each other. Now, interoperability as a concept impacts 25% of the value potential by 2030 at the lower end and 75% at the higher end. Proprietary systems, siloed, walled gardens are a big impediment. So even if the perceived value proposition of IoT is there, interoperability is a big showstopper. The second important thing is internal to an organization, which is the organization change. Who owns IoT? Is it dispersed across multiple business units, or is there a single owner? Do I have a cultural context set for IoT to be applied for products and services to actualize the value? Is often left to chance. The third important element is cybersecurity, privacy issues, and the ease of installation of IoT products and services. Now, while you can make your investment based on the big themes, which is the value proposition, the ROI, connectivity, technology performance, and so on and so forth, if interoperability doesn't play out, you are likely going to stay at a subscale level and not generate enough benefits for it. So for users of IoT as a service or a product, you need to consider interoperability of IT systems as a fundamental driver, and how do you work around it as an integral strategy if you were to take IoT as a important value driver of your move towards digital. Similarly, how do you set up your organization model, the operating model, the structure, capability, and so on and so forth are important themes to be taken into account. So the big picture is, just because the technology is mature on paper may or may not drive value. So please consider these factors as you move on in your digital journey using IoT. Moving on, let us look at healthcare. And when we look at healthcare as a subject, let us look at healthcare in India. Now, if you look at the key healthcare metrics in India, it has improved over the last few decades. Average life expectancy at birth has increased, disability, adjusted life years, maternity and infant mortality ratio has all improved. However, what has happened in India is a focus on episodic and tertiary care with limited focus on primary and preventive care. The other important metrics that we would look at is the shortage of qualified health professionals as against WHO standards, uniform accessibility of health infra, rural and urban divide continues, and also affordability of care. Now, to be able to bridge this solution and move the needle from tertiary care to preventive and primary care, digital health is a viable solution. As a result of which, in the subsequent slides, we are going to understand the ecosystem which is getting created by government interventions and technology interventions of the government of India to create digital health as a very viable option. Now, if you look at the context of healthcare again, it is expected to grow at 22% CAGR since 2016 and reach 372 billion by 2022. And and the increase in healthcare spending from 1.8% of GDP is supposed to be at 2.5% of GDP by 2025, still muted considering the advanced economies. But having said so, the policy landscape, which is the national health policy and an investment in preventive and primary care, access to financial protection, and the quality access to financial protection in secondary and tertiary care, free drugs, are all enablers of this. Now, if you look at the other important thing is the open digital health ecosystem, which is the National Digital Health Mission, pivoting on the National Digital Health Record, is going to create a data-driven ecosystem which will enable people to understand the therapeutic conditions which need to be worked at a preventive and a primary care level, creating the right ecosystem for growth. The other important thing is the primary healthcare system. The primary healthcare system is getting revamped with the Health and Wellness Center to promote good and early detection of NCDs, non-communicable diseases, which account for a significant portion of your healthcare spend. And also the Pradhan Mantri Janaushadhi Pariyojana, which is the largest pharmacy chain giving, providing medicine across therapeutic areas. Now, if you look at the other very big technology enablement is the open digital health ecosystem or the national health stack. Similar to the India stack, it is founded on national health repositories or registries where providers, doctors and beneficiaries with Health ID are integrated, on top of which there are specific platforms that are built or specific applications, coverage and claims platform, health analytics platform, federated PHR network, which could be enabled through the consenting process by anybody, and to be able to do a far deeper diagnosis to diagnose the issues and provide solutions on the go, which fundamentally transforms or creates an environment where e-hospitals, e-ICUs, the ability to work on NCDs much better as a much bigger and a formalized method. Under this context, with so much investments in national health mission, the policy landscape and so on and so forth, and also obviously the population getting more and more digitally active, is creating a framework where digital natives in the healthcare sector are becoming mainstream, and as a result of which analog companies or care providers in the analog world, the primary healthcare providers, have to move necessarily digital, and the timing is right. Okay, now let's move into, and obviously this is the financial inclusion and protection, which would help people to access quality care, and these are the things, and I will for the interest of time not talk about them. And this is AI, which is technology in healthcare, which is early cancer detection in terms of digital pathology, improving care delivery services, which kind of bridges the gap of quality care professionals to be able to deliver care at tier 3 and below, and rural India, and digital diabetic retinopathy, another very big thing which is happening under the aegis of the Niti Aayog. All of this actually is creating an environment where data, digital processes and other therapeutic areas are converging for the timing being right for traditional care, analog care providers, hospitals and so on and so forth, solution providers to move digital. Second, we're going to talk about banking, and I'm going to read out this big quote, which is banking is essential, banks are not, Bill Gates in 1994. Now, banking is increasingly getting into a regime which is low interest, and therefore traditional banks which are capital intensive are going to find it difficult as their margins or spreads are going to be squeezed, and therefore to move away from episodic lending with the customer to be part of the customer life cycle and to fee-based, knowledge-based services is incredibly important. Therefore, the three major factors that are going to determine the success of the banks of the future is embedding themselves in the customer's life, which is a subject which we all know is embedded finance, sustainable economic model, less capital intensive and focused on growth through services and commission, which we talked about is one of the most important drivers, and how do we adopt technology at different parts of the banking value chain is critical for banks to survive. Now here is where I take about an example of MSME and the digital lending opportunity. The MSME India has 55 to 60 million, majority of whom have turnovers less than 1 crore, actually 96%, and 40% of MSME lending is done through the informal sector. And the biggest challenges which stop MSMEs from accessing credit is inadequate documentation, lack of formalization, available data for being credit worthiness, and so on and so forth. Now what has happened because of the India stack, a rapidly maturing India stack which has multiple layers, API based data is more and more available, and with the GST initiative the data on MSME in terms of is getting more and more formalized, and these data packs are enabling providers to model credit worthiness and to be able to structure loans much better, and therefore to create and digital lending players are creating more market opportunities for traditional lenders and innovators around tailored products, customer acquisition model, which is the supply chain model, and embedding themselves in the supply chain journey of an MSME, and differentiated customer journeys. Now if the traditional bank is not pivoting using technology to these things, he will soon face the challenge of the digital lending players who will own the customer and the engagement of the customer and will have the data, and kind of, and the back of it, the traditional bank will be commoditized. Now here is what you see. I have an MSME registration. My firm has one. My personal business has one, and lending cards send me pre-approved 1 crore loan under the MSME 2022 Yojana without me doing anything. I just had to click a button and they had all my records to be able to get the loan. So that is the change of lending, which is kind of engaging the customer and reducing the friction of the customer, and without having data or submitting data and going through a very complex credit approvaling process, you still get the loan. So that is the future of technology and banking business models converging to create a new reality. The point here is, from these two examples, the point is it the big signals that we take in, or is it the nuanced context, which is the economics, the consumer context, and how the country is evolving as three important vectors to be able to see that should I make my digital investments right now, or should I wait till the consumer matures, there is something happening in the environment, and so on and so forth. Now the last part of this discussion is kind of looking at the same thing from an incumbent's perspective in three different time horizons, which is the early or weak signals. Now we need to understand what is driving the economics of our model. In the banking, the classical economics of the banking model was higher interest regime and the spread, and how do I access and give more and more people credit, and so on and so forth. Technology is fundamentally challenging this business model, as we talked about in banking, where the traditional interest-led model is getting converted into embedding embedding banking products in the consumer journey of every consumer, and therefore being more retail oriented, being more engaging with the customer is very, very important. Otherwise banking will be taken over by fintechs or other technology players, and banks will have nowhere to hide. Now the organizational myopia is willful ignorance. As banking margins get more and more squeezed, you could actually say that this is a passing phase and things will change. But the way banking is evolving and the consumers are evolving, at least in India, it is going to be a reality, and you can choose to be entrenched in orthodoxy, but this weak signal is moving into a clear signal or critical mass of adoption. Same for healthcare. Even in healthcare, you see the government of India's initiatives, the open digital health infrastructure is actually solving long-standing health-related issues using technology, as I called out, right? Can I do anything to halt the disruption? Actually, an incumbent player with even well endowed with capital cannot do much. But the question here is, what do I do with my old core, which is the way that I did business. I had a core of which technology was in the periphery, and how do I get technology into the center of my business format is a critical question when clear signals or critical mass of adoption happens. See, the challenge here is, for management's reluctance to endure upfront cost, unwillingness to cannibalize core, and so on and so forth. And we've seen this client after client, industry after industry, where these kind of pain avoidance or inertia behavior stops us from going. Now, when the new normal has happened, then at that point in time, I've already lost the game, and I actually have not much place to run to. The important, so this was a kind of a short discussion around the choices for incumbent companies and what should the others do. The point here is, can I time my digital investments? Of course I can, for which I have to be much more nuanced in my understanding of how my environment is evolving, how industry structure is changing, and more fundamentally how the consumers are changing. Like the Indian consumer is changing very rapidly, so is the Chinese consumer, but in parts of Europe the change is much slower. So depending upon which geography you are, you need to spend time in understanding it and drawing the right inferences. Like in the example of IoT, the business case is solid, but without interoperability, without cybersecurity, you will not be able to scale from a lab situation or a pilot level to a large scale implementation that will create value. Now obviously these factors change with industry, with technology, and so on and so forth. The objective of this discussion was to give you a sense of how to time your digital investments and lead to a meaningful digital transformation. Obviously this is not the all and end all of the subject, but this is just a short video to help you get started. Any questions or comments that you had, I'm happy to answer. Please leave it please leave it in the comment section and I will respond to it. I hope you enjoyed the video. Please do like, share this video and the channel as you deem fit. Till we meet again, thank you for your time.